This is the stock market short-term view. We're going to look at the VIX first, and then the S&P 500, NASDAQ, and the Russell. Now remember that I'm showing you only short-term analysis right now. And I move between short-term, long-term analysis and different indexes whenever I do this show. But you can see our full, complete analysis every single day. Matt puts this out in our stock index report daily. That's weekly and daily analysis and all of our indicators in there and more. So important levels, important readings on our indicators, and all of the charts in weekly and daily in these S&P 500, NASDAQ, and the Russell. So if you become a subscriber for levels 1, 2, 3, and 4, any of those, which of course you could take advantage of in our Christmas Give the Give special, then you'll be able to get our information every single day in the stock index report daily. All right, so let's start out by looking at the VIX. This is a cycle analysis chart for those of you that are new. And what you see on the bottom is the cycle brackets. This is just an energetic movement in the market in here. And it gives us a sense for the rhythms or the heartbeat of the market. The lines that you see on the top are how the cycles actually formed. So this would be ideal if it rallied half the way up and half the way down and came half the way down. But that's not always how it sets up. Sometimes it peaks on the left side, which we call a left-hand translation. Sometimes it peaks on the right side, which we call a right-hand translation. In this case, it was a right hand followed by a left hand, and this is very important information. On top of that, you could see these vertical lines that show you where the cycle actually bottomed, and you can see that right in here where it actually bottomed right here and actually bottomed right here. And we were projecting that there would be a short-term trough in the VIX down in this time frame, and that's what we got as it started to move up as the stock market started to move down. So we had looked for a next trough around December 1st, plus or minus a few days, and you can see that's where we got that. Now remember, VIX is inversely correlated to the stock market. So as the stock market rallied, implied volatilities came down, as you can see that right in here. Here's where implied volatilities were going up and the stock market was declining. This is all about the demand for puts or the demand for insurance on portfolios. That's why the VIX moves inverse to the stock market. And as the need for or the sense for need for insurance goes down, then so do the prices of the puts, and the puts are and calls move down in their pricing in tandem appropriately, and implied volatilities come down. This is an indication that we saw right over here that the stock market was going to begin to pull back again, and that the VIX would begin to go up again. So that's what we have projected. Now, this is important analysis. The daily trough right over here suggests that there would be a decline in implied volatilities into the 4th week of January. That is what that essentially says, is that there's likely to be a stock market rally sometime into the 4th week of January. So that's important information as we switch over and look at the stock market. So again, what this says to us is that likely we're going to get a decline in the stock market somewhere out over here in towards the end of the year, and as implied volatilities go up, and then a advance in the stock market through the 4th week of January as implied volatilities go down. Now let's see how that correlates to the individual indexes and the conditions that they are in. So this is the S&P 500, and we're also going to focus on our proprietary indicators in here, the slim ribbon and the slim ribbon PO, which is on the bottom. So we look at these yellow zones in here, which are kind of screaming at us, and those tell us when the cycle patterns are coming down in the minor cycle and the dominant cycle. That's when you get the biggest corrections in the market, and you see that right there, right there. When you get into a period where the market holds up for a long period of time and then begins to come down, but only has a few days to go, that tells you a configuration is in place where the market's likely to go to another high. And that's what happened in here. That's why we were positive and believing that the market would continue to move up. Now what has happened is that this the S&P 500, and I'll need to get a little closer look in here for you to see, has threatened that cycle low right over here. Now I'm going to show you the NASDAQ and the Russell. They have both broken that cycle low. In addition to that, there's a minor cycle that you can see right there, and that range is about 8 to 10 days. This was a short one at 7. This was a short one at 7 right there, and this was 9. This was 9. This right over here is only 5 days off of that low. That says to me this is a bear flag, and that the rally that we're seeing in these last few days, or the rebound off of this big 4.4% decline, is likely to fail and come out through, well, the 8th to 10th day, as you see that right over here. So we're looking for a decline of a few more days in here. This is 8, that would be 9, 10, somewhere out over here in the next few days, that is likely to take out this low at 39.13. Here is your resistances and sell zones right in here, and they're declining because this was declining. So we see a failure coming in here either today on Friday or into Monday or Tuesday. And then the market trying to rally again. But because of this formation, we are looking for a further decline, which comes out to the end of the year, where these cycles come down and nest. You can see in here these blue vertical lines that the low projects out to 1227 to around 1/4, January 4th. And that means that there is only a very small likelihood that any rally will be able to come that holds, and most likely declines will come. We had said last week that our projection on the SPY was around 386. That is the top of this support zone right over here, which is at 3865 on the SPX. So it's 386 or 3865. And this, a middle of that right there, is at about 3792. Either of these could be where this declines to towards the end of the year. Now you'll note we have a higher track over here. And based on what I showed you in the VIX, this next advance is likely to come out towards around the 3rd to 4th week of January. So that means that the next advance will either get up to where we believe that 4150 area of resistance would be right up over here that we talked about, or stalling somewhere around these last highs over here at maybe 4060, 4070. So it's a pretty good likelihood that we're going to see a failure in here, an attempted rally out over here somewhere, which would be, in my opinion, a very high probability short sale for short-term traders, and then a move downward again in towards the end of the year. So like I said, getting down to that 3906.54, which it got very close, is a negative occurrence. I'm going to show you on these next two charts how it broke down already on the NASDAQ and the Russell, and it's setting up weakness through the end of the year, and also, as we see in implied volatilities in the VIX, and advance towards the end of the year. So we should see rising implied volatilities through the end of the year. When I switch over here and look at the NASDAQ NDX, you'll be able to see very similar pattern in here, except for the fact that this is a little unusual, as it formed a megaphone right in here, as it had this break in here that was false and then moved up, and then it came down again. So that confirms this low. Again, what we're looking for is this rally to fail. This one has gotten to the sell zone right over here and is likely to come down again, and in a choppy motion, very likely to get down to this level here around 11,260, 11,270, somewhere right over there in the NASDAQ. So it's at 11,680 right now, and likely through the end of the year to get down to that 11,260 area. And getting through this resistance is a very low probability here. As we see that getting under 11,503 is a negative breakdown and gives us a sense that the market is in negative condition. Now, if you look on the bottom here at the slim ribbon PO, this is still giving those positive signals. It did the same thing on the S&P 500, and you can see over here where it was negative in red, how it was continuously going down. This says to me that, well, maybe you get a little bit, this test down over here, and then it tries to rally again. But at some point in here, the slim ribbon is going to cross over. That 8 will get below the 13, and this will turn blue. And then when it becomes really negative, they will all align on the downside like you saw right over here, and it will turn red and turn the slim ribbon PO as red. Slim ribbon PO is a proprietary indicator for our level 4 and level 4 plus members only, and available to use on the Thinkorswim platform. So that is important information that you can have. Now, this is getting very close to neutralizing, as you can see right over here on the slim ribbon, as we are getting into these sell zones. The probability of another decline coming is extremely high when I look at this. And again, our target down over here towards year end is about 11,260, right down over here at what is the halfway move from this low here to this point right over here. So that is a look at the NASDAQ, the NDX. Now the Russell is giving a similar story in here. We'll just take a look here at these last cycles where it is pointing to even maybe a little bit weaker situation, as it has gotten clearly below that 1820.71 low right in here some number of days ago. It's not even really able to flag as we see happening. It's more a bearish looking triangle, and this is very likely to come down again here. It doesn't even look like it could get into the sell zones. This one is the most negative, acting as a turn neutral, as you can see here on the slim ribbon PO, and very soon could go negative in here. So we're looking for a best case decline of 1770 here in the Russell, with a pretty potential move at 1740, pretty good potential to coming down right over there. Again, the ideal low timing range is somewhere over here around 12, just a day before Christmas to a day or two after New Year's. So this all points to a weak negative period through December. It's all lining up very, very well. So what I showed you here is just the short-term charts. The intermediate term charts still are positive and still are giving positive momentum conditions. That is in alignment with what we believe will bring a decline of moderate proportion down towards the end of the year, and then another advance, which takes the market up through sometime towards the end of January before we see a period of very severe risk as we get into February, March, and maybe even early April. That's a little longer term perspective in this short term view of the stock market. I hope you found that extremely valuable. Don't forget to get the SIR Daily, and you can get that by taking advantage of our special. We're down to the last couple of weeks right now for this holiday special, where you can get become an askSlim member for the lowest prices ever. We are going to give you a bonus gift if you give this gift to somebody else, or if you give it to yourself. We're going to send you back an Amazon gift card, the size depending on which level you do become a member of, and you're going to find this to be fantastic. These are non-recurring, so in other words, you're going to get this subscription or give this membership for 3 months. And then if it's for you or anybody else, you have to decide whether you want to resubscribe again. So there's no renewing in here. It will not recur. No, the only charge to the credit card will be the first one. And then we're going to send you back a gift card and you can get that information as to what the gift card size is by clicking Learn More. Go to the top of the askSlim front page, askSlim.com. Click on Learn More, and all the information is there as to what's included in every membership. And of course, if you have any questions, write to Matt at askSlim.com, and he will be able to answer that for you. Our special Give the Gift of askSlim for 2022. This is the lowest prices you'll see this year, next year, just an unbelievably great opportunity to learn. The style of analysis that we present, that you can see, is just loved by so many of our members.